last year was actually the first year where the interest rates on mobile home park loans fell beneath the interest rates on multifamily loans, which means the banks are now viewing mobile home park loans as a more favorable and a safer bet, if you will.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 284. Mobile home park investing has been a hot asset class over the past 5 years, and we certainly talked about it on this show. But what kind of opportunities are really available to investors right now, and how has the increased competition from institutional buyers and effects of the pandemic affected the opportunities in this space? My guest today is here to give us an update on the state of mobile home park investing. Brian Spear is a founder of Sunrise Capital Investors, which specializes in acquiring deals in off-market, direct-to-owner transactions. He's also the co-host of the Mobile Home Park Investing Podcast. Brian, welcome to the show.
Hey, very much appreciated, Brian. Nice to be here.
Why don't you just give us a little insight into yourself and how you got started investing in real estate?
But I'll do my best to be as brief as possible here. But our firm, Sunrise Capital Investors, we own and operate mobile home parks and parking lots across the eastern half of the country, about 15 different states. And that's where we're at today. But my very first experience with mobile home parks was actually living in one when I was 10 years old. My family had fallen on some hard times. My parents got divorced, and my mother, as a single parent, decided that the best decision for her family was to move into a mobile home. So again, I'm 10 years old, living in a single wide unit. And this is where, I got a little bit of experience understanding that the stigma associated with mobile home parks is largely a fallacy, truly. My mom's very, very well educated, extremely intelligent. She's an accountant graduated from the University of Illinois. Truly had just fallen on some tough financial times. So in any event, that never really limited my interest in getting involved in the space. That stigma was never really a blockade from my perspective. In any event, I'm 10 years old there, and the entire time, every single month when I'm taking the check over to the landlord, I'm thinking to myself, how can I be on the other side of this table? And from that point, truly, my entire adolescence was about setting my family up with a more firm financial foundation. Worked extremely hard academically and athletically to get a bunch of scholarship offers all over the country. I wasn't tall enough to play basketball, wasn't strong enough to play football, but I chose a sport where I could kind of make myself successful. I taught myself how to hit both right-handed and left-handed. Ultimately landed at the University of Kentucky. And trying to expedite this long, rambling story here, had a pretty good job in my 20s where I was able to build piles of cash, but the goal was able to turn them into streams of income, right? That's kind of the goal, so that you can control your own destiny, turn those piles of cash into streams of income. I thought I was going to get involved in investment banking, but found real estate as kind of a more simple A to B path, and looked at all the respective niches out there, and heard that mobile home park investing, again, was going to, for similar time, energy, and effort, produce better risk-adjusted returns than any other real estate asset class. And really just wanted to find the mentor that could help me get involved in the space and get back to my roots from my young childhood. So at that time, I'd reached out to Kevin Bupp. He's actually been on your podcast a couple different times. And Kevin, I'm fortunate to say he's my business partner now. He's 7 years older than myself. And I heard him on a podcast back in the day, 2013, conveying about the merits of the asset class. And I knew that if I could be half as successful as what he had been when I got to his age, I would consider myself successful. So I truly did reach out to him and basically said, hey, buddy, I got an offer you can't refuse. I'm going to come work for you for free. I'm going to move down to Florida. I'm going to work 60, 70 hours a week. I'm going to do my best to help you grow your business, bring hundreds of thousands of dollars down along the way to try to help you grow your business. And I think over time, we'll be able to kind of grow what you've done thus far. I love the strategy, love that investment philosophy, love the thought process. Let's grow it into something more substantive. So in any event, that's an expedited version of A to B, kind of where we're at today. Again, used to be buying mobile home parks, one-off individual deals, friends and family. We've now moved forward in much more formal fund structures, rolling out our third investment fund this past fourth quarter.
Wow, that's a lot there. I want to hang just a moment on you contacting Kevin Bupp, friend of the show. He's been on a couple of times. I've been on his show.
Yeah.
Some people might be scared by someone who would call him up and say, "Hey, I'm going to move to Florida and come work with you."
Yeah.
What value did you bring to him in that transaction there?
Yeah, great. I would say first and foremost was the litany from my perspective, the risk reward was heavily weighted in his favor, right? Truly, I'm going to come down, work 50, 60, 70 hours a week, not ask you for a dime. Don't pay me a dime. I'm going to bring hundreds of thousands of dollars truly to help you grow your business. And along the way, I'm bringing a resume conveying that I've been successful every step of the way in everything I've ever done. I was one step beneath academic All-American when I was at the University of Kentucky, had multiple job offers, six-figure in my 20s. I was able to build a business from scratch up to a $50 million private valuation, again, in my 20s. My very first job out of school was traveling around the country, doing SOX audits for large telecommunications companies. And one of the founders of that business broke off and started his own company. And he asked a select few people to come along with him. So I was one of the first 6 people in this business to start from scratch. I mean, just like any young entrepreneur, truly hustling, the old Silicon Valley craziness where there's just a handful of people there. And we built that business into a thriving enterprise, well over 50 employees, again, $50 million valuation. And I walked away from that because I didn't own equity in that business. I earned a very good living, but I didn't really control my own destiny. I didn't own any equity in that respective business. And I knew that I could bring that skill set that I'd garnered starting something so small and growing it into something so substantive and bring it to Kevin and his foundation, what he'd already done in real estate. That I know he had the blueprint and the path. I could help him bring the tools to scale what he had already kind of put as a really solid foundation there.
You brought a lot of value and a lot of experience and a track record in a completely, seemingly different field in areas, several seemingly different fields and areas, but you also seem to bring a lot of confidence with you. Talk about that. Talk just for our listeners, because there's a lot of people who get into real estate investing, whether it be mobile home park investing, apartments, what have you, and they feel uncertain about their destiny. You seem to have a lot of confidence and a lot of certainty. I mean, why is that?
Oh, great feedback, and sincerely appreciate the words. I'll take that as a compliment. I think that derives from the old phrase prep-ortunity. Again, in my yesteryear when I was an athlete, I'm one of those guys that believes that you create your own luck. That there is no such thing as luck. And true, you have to have a certain set of circumstances, the confluence of events that ultimately culminate in this moment of opportunity for you. But the term prep-ortunity it suggests that you prepare in advance for that opportunity. And when that opportunity arises, you are already ready and established to take advantage of that situation when it arises. It's reminiscent of the guy that's worked 20, 30 years, dirt under his fingernails, grinding every day, and then he strikes it big in year 30 after 30 years of grinding and not really making headway. And then year 30 he makes it big, and folks call him an overnight success. I just don't think that happens. I think that you put in the work, you put in the foundation, that over time. You build confidence through the process, through the journey, through growing. And that's really, I would just convey that's kind of how I feel about gaining confidence. It's just putting in the hours day after day.
Well, you just taught me a new old phrase, prep-ortunity.
Yeah, that one actually comes from Ron Polk. Ron Polk is a legendary SEC baseball coach. Again, I played baseball through my pretty high ranks in amateur baseball. He was a legendary Hall of Fame coach at Mississippi State, and I saw him speak when I was in high school. That one resonated with me. I take it to this day. So yeah, it's a good one.
Well, let's talk about the mobile home park investing. You went to Florida, moved to Florida, working with Kevin for free, 70, 80 hours a week. Being immersed in mobile home park investing like that, what were some of the first things you learned and were surprised about?
Mobile home parks are certainly a very unique niche. I would say unlike any other. Every niche has its own individual idiosyncrasies, but mobile home parks are unique in that there are a full three things that you need to do to be successful in any deal. One, you need to find the deal. Two, you need to find the money. And three, you need to be able to operate the deal. In a lot of other asset classes, you have the ability to outsource that third piece, to outsource that property management to a really high quality, credible third party operator. But one of the unique aspects of mobile home parks is you don't have that ability. When we first started coming in and trying to scale in the mobile home park industry, we sought out every one of the credible players in the crazy niche of mobile home parks, because we knew that we were exceptional at going off market direct to owner to acquire deals. And we knew that we weren't going to have an issue raising capital. We've always been oversubscribed in every deal we've ever done. Again, we're leveraging Kevin's decades of experience of going off market direct to owner. We do thousands and thousands of outbound cold calls each and every week. We send out tens of thousands of pieces of direct mail. Again, those systems were derived from his single family days prior to the Great Recession. It's how we built 125, single family home residential portfolio. We bring that over to the commercial real estate space and mobile home parks. Not a lot of people doing that, and certainly not to the degree to which we do it. But we were weakest in the operational piece. So when we first got involved, we literally took a list of the top 100 operators, called every single one of them painstakingly, and wanted to see if they'd be interested in working with us in a third party capacity, whether it was kind of on a JV type of structure or just pure third party management. Only a handful were worth real follow-ups, and we did test out a couple, but they all failed just miserably. And it's largely due to the fact that third party property management in the manufactured housing sector, it's really just not that profitable of an endeavor. When lot rents are $200 and you're doing the oversight and the management of that particular unit, and you're getting 5% on a monthly basis of a $200 lot rent. I mean, you're making $10 for the month of work you're putting in to help manage this respective unit. When you compare that to multifamily, where it's $1,000, $2,000 monthly rents, it's tough to make the numbers pencil from a pure third-party property management perspective. And I would say that is the most difficult piece that folks underestimate when getting involved in the space. You're not only going and building an investment firm to go find assets, you're also going to need to build a full throttle property management company if you really want to scale and thrive in the industry.
So how intimately were you involved with that building of the property management piece?
Early on in the growth of any business, you wear a lot of hats. I was one of the guys that wore the HR hat, right? So I'm I'm the guy that's scheduling the payroll provider whom we're going to work with, helping scale some of those early systems and processes to get our employees the benefits necessary to attract them to grow with our organization over an extended period of time, amongst other things. Kev, I view him as the trailblazer, right? He's the guy that is in the front of the ship, and if in the woods, he's the trailblazer that's just knocking down every tree, and I'm the guy behind him scurrying feverishly to try to organize everything in a nice, neat little manner behind him as he rolls forward. So that's kind of how I view the relationship, and truly what I do behind the scenes. It's trying to fill some of those gaps as he's branching out in his entrepreneurial mode. I'm trying to put the systems in place behind him as we're rolling. How
do you put those systems in place for the property management piece, which is so crucial to the success of the property and the investment? How do you put that in place?
Great stuff. And there's a litany of different ways that folks can seek to put in systems and processes. You can get away with running a more mom and pop style business if you're just managing a handful of assets. But once you get 10, 15, 20 employees in place, you really do have to have more formal structure and a real set of standard operating procedures that you're implementing throughout the entirety of the portfolio. Once we got to a reasonable scale, we decided to bring on a consultant to help us institute the entirety of the EOS Traction platform. It's likely that you and or a lot of your listeners are familiar with Gino Wickman and Traction and the book that he's rolled out here. I think it's been maybe 10 years, something like that, since he's rolled that out. But he's basically taking a lot of the insights garnered by Dan Sullivan and bringing it over into a little bit more sizable small business, something that's typically at least a couple $1 million of revenue, something that's typically 15 employees to maybe 50 employees. And that business model, the entrepreneurial operating system, truly does afford you with a nice segue between being a very modest sized solopreneur where you've got maybe a handful of assistants, secretaries, virtual assistants, whatever the case may be, in that interim phase of growth of the business prior to really being a full thriving corporation, that interim phase between maybe 10 and 50 employees, I think it's a very nice system to have in place, the entrepreneurial operating system, where you're able to have weekly meetings, where you're able to have quarterly reports, where you're able to have annual goals, and roll forward in that manner. So that's what we decided to roll forward with once we got to a certain size and scale, knowing full well we needed to begin to put some systems in place. A couple other tips that we've used is some software. Trainual is a piece of software that we've used where we can basically go in and I could one time record my screen and myself handling XYZ task associated with whether it's property management or investor relations or whatever the case may be, HR, AP, name it. Do it one time and document it via video. And then whomever is going to come in shortly thereafter can handle that ongoing task as we roll forward. So technology is a beautiful thing, and you really do have the ability to leverage yourself and replicate your own efforts now with some of the really, really nice technology that's available.
Just to go over what you just said, and for our audience, you mentioned a book called Traction, which teaches the EOS system, the entrepreneurial operating system. So basically anybody who has a company with employees would want to read this in order to understand how to put systems in place that will help systematize your business, basically, and find the right people to fit those positions to do so.
100%. Yeah, couldn't agree more. And truly, I think it also helps the ownership and the leadership team clarify why they're doing what they're doing and ultimately create a business that helps you get to that end goal. Far too often, business owners can't see the forest through the trees. You know, as I'm talking about Kevin and using the analogy of being a trailblazer through the forest, somebody at some point's got to climb up one of those trees to make sure you're going in the right direction, lest you blaze through 20 miles of forest and realize you're going east instead of west. That's what the EOS system allows you to do. Peer up every so often, every quarter, climb up the tree, make sure that we're actually going in the right direction, and then climb back down the tree and actually knock out the 90-day cycle and the 90-day world that is referenced in that system.
And you mentioned an app called Trainual, like manual, only Trainual.
Correct. It's basically a digital version of an employee manual.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat-fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by
the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Virtual assistants, have you started employing virtual assistants in your business as well?
I think we were an early adapter to this. We've been very fortunate to be willing and be open to entertaining the idea of leveraging our time. And I think that allows you to scale a heck of a lot quicker. How does somebody like Elon Musk not only run SpaceX, but also Tesla? Because he's leveraging the talents of other folks. So we've always been amenable to that. And yes, the answer is yes. We used to go to places like Fiverr and Upwork and employ some virtual assistants on a gig basis, on an hourly periodic basis. But we truly have now moved forward where we have multiple, we would consider them remote associates as opposed to virtual assistants, because we feel that they're truly members of our team. And we have multiple remote associates that are international that work for us on a full-time basis, where we pay them a fair wage, something akin to, call it $20,000 on an annual basis. But when you're in Mexico, that ratio is such that you're living an exceptionally high quality life, especially for somebody who might be in their mid-20s, early 30s. If they're making $20,000 US dollars, that's a fairly substantive six-figure style pricing power or purchasing power in Mexico. So, and again, from our perspective, being in affordable housing, mobile home parks here in this country, we got a lot of bilingual folks and a lot of folks that have Spanish as a primary language. So it bodes exceptionally well for us. I'm thinking of David Quinones. We call him Q. He's a guy that's worked for us for a couple of years now. This guy should be on the cover of GQ. He's unbelievable. All he does, he's in his late 20s. All he does is lift weights and sell mobile homes, and he's amazing. And the guys want to be him, and the chicks love him. The guy is unbelievable, and he's doing exceptionally well in his mid to late 20s as a salesman, working for us full time, just selling mobile homes here in the States. So yeah, absolutely, folks should take advantage of it. I think we were ahead of the curve a little bit prior to the international pandemic occurring. But as you have seen over the past year, large businesses are now realizing that they don't need to be based in Silicon Valley, and they can open themselves up for so much more talent, truly international talent, where they don't have to pay what I would consider to be oftentimes egregious annual salaries when they can employ somebody for a significantly lower annual cost and truly receive the same type of skill set, and the employee can receive the same type of living experience that they otherwise would. So again, mutually beneficial to entertain that and certainly go down that road. So yeah.
Yeah. What other systems have you put in place with your mobile home parks to kind of future-proof your business?
First and foremost, the goal is just to be in the know. I only know that I know nothing, but I'm going to do my best to try to gather as much data as I possibly can and make the best decisions that I can, given the data that's in front of me. And the only way to really stay on top of all of that is to subscribe to all of the state MHA, manufactured housing associations, in the states in which you own assets, especially during the international pandemic. That's proven to be unbelievably prudent and has helped out tremendously, because as the government rolls out the next $1.9 trillion package or whatever the case may be, and they send those federal funds down to the individual states. Well, the individual states are going to handle their coffers a little bit differently. And we need to know how each state is going to be allocating the funds, where we need to go to get out in front to help each respective mobile home park and all the residents tap into some of that rental housing assistance. And it would be difficult for us to go do that and research all of that on our own. We leverage the state associations that can help us expedite that process, and that way we can help out as many residents get through the pandemic as we can along the way. That's the first thing that I'd say. Leverage all the data that's available in the marketplace, and then I would also say, just from the investment perspective, from where we're standing, we're huge proponents of Warren Buffett's investment philosophy. So while you certainly can't future-proof anything, as it were, we're going to do our best to try to put ourselves in a position where we're going to be able to generate the best risk-adjusted returns that we can. And we do that via a couple different means. One, we consider ourselves truly investors as opposed to speculators. We employ a buy, improve, refinance, and hold strategy with the intent to hold these assets in a perfect world perpetually. We would hold these assets forever if we had the ability. Certain, markets change, things change decades down the road, but that's how we view these assets truly as investments, as opposed to development or value add speculations. I can't tell you how many, multifamily properties have changed hands in the past decade, and every single time it seems to be a value add transaction. Well, I don't know if somebody's owned this asset for 2 years and the next buyer is promoting it as a value add transaction. They flip it 3 years later. It's still a value add transaction. I don't know when the value is completely sucked out of that deal, but it seems to me like at some point that becomes a bit of a hot potato. So we prefer to just renovate the assets, implement that value add piece most assuredly, but then keep it and hold it and allow the long-term favorable macroeconomics of the asset class to take hold. Mobile home parks have the highest same-store NOI growth out of any asset class. So why would we not allow the tailwind to take hold over time? I'd also say just buying with a margin of safety, again, using Buffett's terminology. That's what was so attractive to me about Kevin's philosophy. Again, using his core competency of going off-market direct to owner to buy assets. 85% of the deals we've ever done have been done off-market direct to owner. And if you're able to negotiate in that manner in a fragmented niche where there's not a lot of buyers vying for the same asset, then usually Kevin can do a pretty good job of negotiating that deal off-market direct to owner. And we feel like we're buying that asset day one below the market value. From our perspective, significantly below the intrinsic value, but even just below the market value, where if we had to sell it day two, we'd be able to generate a pretty good profit. And those are some of the ways we try to stay out in front of that and do our best to future-proof the business. Certainly imperfect, but those are some of the things that we do to try to get out in front of those issues. Murphy's Law, what can go wrong will. So just try to get out in front of it to the best of your ability.
Let's talk a little bit about buying direct from sellers and buying off market. I mean, how is your pipeline now? Because it seems like no matter what the asset class, mobile home parks, apartments, whatever, there's so much competition. And especially now you have institutional competition coming into mobile home park space. From what I understand, maybe you can enlighten me on that. But how are you still finding deals in your pipeline?
Love that. And great question. And you are correct on all fronts. Mobile home parks for decades were overlooked as an asset class. Nobody used to brag about owning mobile home parks around the water cooler. But that has changed. Now it's kind of the hot topic, and people have understood the merits of the asset class and truly that they have historically outperformed and provided the best risk-adjusted returns. And all the data suggests that for the foreseeable future, they are likely to outperform through 2024 as far as Green Street predicts. But they are projected to have the best risk-adjusted returns out of any other asset class. And for that reason, institutions are now starting to come into the space. For decades, that data wasn't available. And now that they're starting to compile it, and institutions are able to see the merits of it, and now they're dumping in billions of dollars to the asset class. We're going through a substantive consolidation phase now, no doubt about it. It's not like 2012 where you could throw a dart and find a 12 cap somewhere or a 10 cap. That doesn't exist anymore. But from our perspective, a rising tide lifts all boats. We're going to look at this and see the silver lining. Truly, it still does have the best risk-adjusted returns in the marketplace. So we still love the asset class, phenomenal macroeconomics. But the cap rates have come down, no doubt. The unique thing is, as those cap rates come down, the private equity firms on the equity side aren't the only folks that see the merit of the asset class. The folks on the debt side, the banks, the institutions, they also see the merit of the asset class. So while yields used to be significantly higher, banks are willing to lend at much, much, much more attractive rates, not only because the Fed funds rate has dropped precipitously, but also because banks are more willing to lend on the asset class as it has historically done quite well, especially during periods of recession. So last year was actually the first year where the interest rates on mobile home park loans fell beneath the interest rates on multifamily loans, which means the banks are now viewing mobile home park loans as a more favorable and a safer bet, if you will, than multifamily. And when that happens, you're still able to get pretty good margins between the interest rate and the cap rate on these respective assets. So still very attractive from our perspective. And then, of course, if in terms of going off market direct to owner, I couldn't agree more. That still is the best way to make the best deals happen. While those big players are coming in and they're rolling out billion-dollar funds, they can't do what we do. They couldn't do what you do if you wanted to start buying a couple mobile home parks here and there. When they go buy assets, they have to go buy them in $100 million chunks. And mobile home parks are very modest in size. I mean, our average transaction size, a few $1 million, $2.5-3 million. They could go buy every one of our assets all cash, and it probably wouldn't move the needle for them. They need somebody like us to do what we do. Go off market, direct to owner, buy deals one by one from mom and pop operators, roll them up into a nice portfolio. We consider ourselves portfolio aggregators. And once we get to a certain size and scale, then folks like Blackstone, Carlyle Group, they come in and buy those assets in one fell swoop at a significantly compressed cap rate. And that's the strategy from our perspective. So yes, no doubt about it, there's more competition coming into the space, but there's still plenty of room for a lot of different folks to really be successful in the industry today.
So your end game then, it sounds like, is to basically sell off to a larger REIT or institution once you've amassed all these different communities.
What we know is building the portfolio like that provides a more substantive valuation on our portfolio. From our perspective, as mentioned, we are buy and hold type of investors. Buy, improve, refinance, and hold type of investors. That said, because we do roll out fund structures and we bring on partners, when you raise capital, it's a heavy burden. And our goal is always to make the best investment decisions on behalf of our partners. And if somebody were to come in and provide us with what we would consider to be a Godfather offer, an offer that we simply can't refuse, then we would be open to entertaining that. But that's not our intent. We certainly envision holding these assets for long periods of time, upwards of 10 years. Whenever we buy a given asset, we have the mindset that if the market closed tomorrow and we had to hold this thing for at least 10 years, we'd be comfortable doing that. So we're certainly long-term buy and hold type of investors. But yeah, hey, if somebody's willing to pay us a price that we feel is above the intrinsic value of the asset, as a prudent manager of capital, would be willing to entertain that offer.
You're buying off market primarily, probably from mom and pop owners, if I recall what Kevin said. I know even when you're buying off market doesn't mean that the sellers are willing to sell at a reasonable price. They still have an inflated sense of what the value is. How do you deal with that?
Great point. And from our perspective, it's about getting to scale. It's a numbers game. I'm not exaggerating when I convey that we do thousands and thousands and thousands of outbound cold calls every week. We do about 5,000 outbound cold calls to owners every single week. About 10% of those individuals pick up the phone. So we got 500 people that pick up the phone. About 5% of those people will schedule a call with one of our more formal acquisitions associates. So we have about 25 appointments on a weekly basis with mobile home park owners. Of those 25, we've got a handful that we're willing to kind of come to reasonable price in terms, we're at least in the ballpark. The majority of them, even if we get them on the phone, 25 of them, 22 of them are going to say, I need $18 million for my 40 space park. And then we've got a handful that were, reasonable, that it's just a timing game and a numbers game. Folks are going to sell their asset for the real reasonable price when they either need or want to sell. And we're just looking for that motivated seller, just like Kevin was when he was buying single family homes, knocking on doors 20 years ago. It's the same system. It's the same thought process. An owner is going to sell for a reasonable price when they either need or want to sell, whether that is when their debt is coming due, whether that is when their family has issues in terms of estate planning, whether there is an issue associated with reinvesting capital and CapEx into a given community. Oftentimes these owners that have owned these for 10, 20, 30 years have really done a great job of creating cash flow, but they haven't created a sinking fund to reinvest capital back into the deal. And now they've got a huge substantive CapEx issue to go, they need $500,000-600,000 to go fix XYZ inside of the park, and they don't have it. folks are going to sell for a reasonable price when they either need or want to sell. And our goal is just to be in front of them and have that consistent message over and over and over. So when they either need or want to sell, they think of us. And that's the goal.
And Brian, you just used a term, sinking fund. No one's used that term on this show before. Mm-hmm. I see that as being very similar to capital reserve fund. Yep. Is that the same thing?
Yeah, same thing, different language, similar terminology, just a reserve account that sits there and compiles on an annual basis, knowing full well that it's going to ultimately be used for those inevitable expenditures as we roll forward. So yeah, same thing, just the capital reserves.
What's the rule of thumb expense ratio for a mobile home park? What would you say that is?
I would say the first thing that you need to hone in on is the type of utilities that are inside of the community. A couple general rules of thumb here. You need to know whether it has public utilities, municipal utilities, or private utilities. On assets that have municipal utilities, there's going to be a lower operating expense ratio. Oftentimes you can get it down to 30, 35%, maybe a little bit higher, depending on how tight you can run them. Private utilities, again, does it have well and septic, or does it have county water and septic? Does it have one or multiple private utilities? But those private utilities invariably are going to have a higher operating expense ratio, usually in the 40 to 50% range. And then layering on top of that, the other key number that you'll need to know is how many of the homes themselves are owned by residents and how many of the homes are owned by the park. In a community where the residents own their own homes, typically a significantly lower operating expense ratio. When you own the mobile home units themselves, a lot of turnover there, a lot of maintenance and repair, a lot of reinvestment into the homes, and that usually skews that number up a lot. So again, imperfect science, but ballpark, it's going to be somewhere in the 30 to 50 range, depending upon those factors that I just outlined there.
Let's switch gears here a little bit, because I know when Kevin was last on the show, we were talking about parking lots and parking garages as well. I know some headway has been made in that area. Can you talk about that? Because that's a great asset class too, parking and parking garages.
Couldn't agree more. We love parking. We love parking facilities, both parking lots and garages. From our perspective, it's a completely blue ocean strategy. We feel like we were ahead of the game when we were involved in mobile home parks a decade ago, and we feel like we're ahead of the game in parking. From our perspective, I mean, look around. I don't think there is anyone else in the country doing what we're doing, and again, certainly not doing it to the scale and to the degree to which we're doing it, where we're going off market, direct to owner, using the same tactics that we've used historically in mobile home park land to go out and find parking lots and parking garages in high quality downtown urban CBD environments or high traffic tourist areas. So, phenomenal asset class. I'll try not to drone on here, but it's a very similar model, right? Long-term cash flowing covered land play strategy, implementing the buy, improve, refinance, and hold model that we have used in mobile home parks for decades. Talking about headway in the industry, before we jumped on, we were talking shop about it a little bit. You'd asked kind of how things are going on that front. The one that we're most excited about right now is actually a garage that's down here in the Tampa Bay area. We're in the Tampa Bay MSA, and we've been working behind the scenes to acquire a parking garage on Clearwater Beach. It's an unbelievable asset. Truly, just imagine owning real estate's all about location. And you cannot get a better parcel of land in a beach environment than being on Clearwater Beach, in the number one beach in the country. And I was actually voted number one beach in the world in 2018. So when we get our hands on a parcel like that can create a nice yield in the interim, we feel like over decades, 10, 20, 30 years down the road, the underlying land value will continue to increase. Again, a cash flowing covered land play. The covered piece suggests that they're in the interim, the expenses associated with operating that parcel of land are going to be covered. The insurance, property taxes, they're going to be covered by the cash flow, and you're going to get a reasonable yield. And the land play suggests that over time, that underlying land value will continue to increase if you buy in a nice high quality MSA with high quality underlying demographics. And again, just really, really exciting because it affords us an opportunity to buy assets that are exceptional locations. If people are willing to pay for parking, they're willing to pay just for the right to be in the vicinity, then you're very, very likely in a high demand area that has some high prospects decades down the road. So anyway, very, very exciting, making headway there and just continuing to look to roll up the consolidation strategy that we have done historically in mobile home parks and bring it over into the parking sector.
Hey, Brian, as we get close to wrapping it up here, what advice would you have for our listeners who are interested in getting into mobile home park investing or even parking lots for that matter?
I would convey those are kind of two separate pieces. The first regarding mobile home parks, it's just try to absorb as much information as you possibly can. There's a lot of free resources out there available today. We, in addition to Kevin's Real Estate Investing for Cash Flow podcast, we started a podcast called the Mobile Home Park Investing Podcast years and years ago. Hundreds and hundreds and hundreds of hours of free content where we truly do turn our business model inside out, explain to folks exactly what we do. So feel free to sift through that at your leisure. In addition, there's a couple of places you can go to learn more about mobile home parks. I would say MHU, Mobile Home University, is one of those places. In addition, Mobile Home Park Academy, another place you can go to learn about the business. And then regarding parking, prudent to go to the National Parking Association to learn how some of these public-private partnerships interact. In addition to that, you can go to a website called shoopdog.com. This is actually a play off of Snoop Dogg. There's a professor called Donald Shoup, a UCLA professor who's done a ton of study in the parking industry over the past 30, 40 years. And on his website, shoopdog.com, he goes into why there's a unique supply and demand imbalance in parking, and why municipalities are staving off the new supply coming online of parking facilities, and why municipalities need to begin charging higher prices. So anyway, those two areas I'd suggest.
And Brian, how would someone get a hold of you or find out more about you?
If you want to learn about Sunrise Capital Investors and what we're doing, that's our firm, our investment firm. Head to investwithsunrise.com. You can learn more about the current opportunities we have at hand. As mentioned, we just rolled out our third growth and income fund this past quarter, where we're going out and buying parking assets and mobile home parks and looking to help as many people as possible generate cash flow and build legacy wealth for their families. So very much appreciate it, Brian.
Well, I appreciate you being on the show, Brian. This has been fun talking about mobile home parks and just how you pitched yourself to Kevin and moved to Florida to get really involved with his business and the success that you guys have had so far, as well as your new parking and parking garage investment. So that's exciting stuff. Thank you very much for sharing it with us today.
Pleasure to be here, Brian.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.